have to ask you, when you get your dry cleaning, plastic or no plastic?
You know, I like Kathy's answer. I think a little bit less would be better, but I think I don't get my shirts wrapped individually every time.
I think mine comes in like two, maybe?
Yeah, like 2 to 5. Yeah. But I get all my golf shirts dry cleaned, so I'm very aware of the plastic issue.
It's a lot of dry cleaning.
I'm aware of the plastic issue.
Ryan Leopold's back with us from Cobalt Mortgage. Ryan, welcome back.
Great. Thanks for having me, Ben.
Yep. And, people are starting to talk about real estate again. Prices are going up. Rents are going up. And now you start to see the investor come back in, and not just the investor who went to the auction and bought the foreclosure, but just people who would like to maybe own an investment property or 2 investment properties seem to be trickling back into the market here.
Yeah, it seems to be. I think, obviously buyers, whether it's a first-time home buyer or move-out buyers, are coming back to the market as they can. And it seems like investors are really seeing some great opportunities, especially in our market to, like Kathy mentioned, buy at 2004 prices, basically, and interest rates in the mid to low 3s. So I think it's an unbelievable opportunity, especially with the desperate need for rental properties in the market right now. So the inventory of homes are low, but also the inventory of good rentals are low too, but a high demand.
And when you start thinking about the investment side, the way you finance it comes into play so much more, because now you're really financing an investment rather than financing your home. And there's some really big key differences. When you start a conversation with somebody who is potentially going to be buying a house, what are some of the big questions that they need to be thinking about?
From the investment side, I think the biggest thing when it comes to buying an investment property, and especially the mortgage side, is what is their end objective? Are they looking to flip a property and make some quick money? Are they looking to create wealth over time? Are they looking to create cash flow? Are they looking to kind of diversify some of their wealth? I think everybody's objective and how much time they can commit to an investment property is going to be different. So I think that's really key, that whether it's on the real estate side or on the mortgage side, we have to understand truly what their objectives are. And sometimes they just don't know. And we have to kind of lead them in the right direction and let them know what their options are to start a real estate portfolio, whether they're looking to buy one property or an apartment building. I mean, it's all a little bit different.
It's kind of like the plastic on the shirts of the dry cleaner, right? I mean, you have to understand, what's important to that person before you just put them in a loan because it's what's there.
You're not letting this dry cleaning thing go quite
I'm not. I don't know why, man. I think I got a bin at home that needs to get to the dry cleaner, and it might have been asked of me earlier today by my wife, and that bin may be still sitting at my house.
Right. You probably forgot. Sounds about right.
So, the way that people want to invest, I mean, seems to be, do you want to hold it? Do you want a quick buck? I mean, those are big questions that people have to ask themselves.
Yeah, and I think they have to ask themselves that, and they have to also understand kind of how it all works. So I think a lot of investors who are new come in and they think they could easily buy at the auction, foreclosure auction. They think it makes a ton of sense to flip properties because they've seen a show or they've had friends that do it. And there's a lot of intricacies that go into buying real estate for the long term and also in the short term. And all those require a very specific strategy. And the mortgage side and the money side is a huge part of that. Whether you're looking to flip or buy and hold.
And so let's talk a little bit about the flip versus buy and hold, and at least the financial piece.
Okay. Yeah, so the biggest thing that kind of draws people in is the foreclosure auction, but I think a lot of people don't understand that when you buy a property at the foreclosure auction, you're literally buying that house in cash. I mean, not literally in a briefcase, but you're bringing a cashier's check down to the foreclosure auction, which is unbelievable. It's the most informal process to buy real estate you've ever seen in your life. It's literally at the courthouse steps. And somebody comes out, you bid on a property, and you give them a cashier's check pretty much on the spot. But you have to have that money. I mean, there's ways to get creative on the financing side and borrow the cash. You're still going to need 20 or 30% down of your own money, but you can borrow the money. It's expensive money, but you can still do that and buy at the auction. So I think people want to go down that avenue without really understanding how it works. But like I said, the money part's huge. You have to understand how hard money works, is what they call it, versus a traditional finance property, because you're not doing a mortgage in the traditional sense at the auction.
If you're going to get a mortgage, it's quick.
Yeah, you got to figure it out. Do you have the cash to do it? Or are you going to borrow the cash? And if you're going to hold this property long term, you got to be basically pre-approved to refinance that hard money financing, which is 12% and 2 to 4 points in some cases, that you want to get off of that money as soon as possible and get into more of a long-term strategy. So you need to have your strategy from the money and the mortgage side in place even before you go to the auction, as opposed to I bought a property and now what do I do? And if you don't qualify for that long-term financing, then you're going to put yourself in a tough position. And the cost is high, so you got to make sure you work all the numbers into it.
So what are some other ways? I mean, the people can buy properties, and how do the mortgages kind of tie into that?
Yeah, so if you're going to be an investor, I think there's going to be the auction. There's hard money financing when it comes to another good strategy is buying bank-owned properties and or properties that need work. Because any properties that need work, like Kathy is mentioning, the roof and other major fix-ups, a lot of times those cannot be traditionally financed through a mortgage. So you're going to have to go in, buy the property, in some cases in cash again, do some fix-ups on the property, and then either try to sell it or refinance it to traditional financing if you want to have a mortgage on it as opposed to buying it in cash.
Sure, but also as Kathy said, you're going to have less demand on those houses, so you can actually purchase it for maybe a little bit less money than you would otherwise.
It's a great, if you can do it and you can set up the right strategy, is what we can help clients with, is it's a great opportunity because a lot of people are scared of buying those properties. If you have the financial means to do it and you have, you can look past the issues and see the potential of these properties, it really is a great opportunity. Because again, a lot of people are passing on some of those ones that just either aren't financeable or just don't look nice.
Now, you talk about these properties that need fixing, and sometimes those could be bank-owned. I mean, they're also maybe just off the market or on the market. I mean, there's houses out there that I think, you can go traditional or non-traditional routes, and you just have to line up the right financing behind it.
You have to line up the right financing behind it, but also understand what your strategy is and what your objectives are as an investor. So you can buy traditional MLS properties, you can buy bank-owned properties, you can try the short sale route, you can get off-market properties. Again, it all comes down to what is your short-term strategy versus your long-term strategy. And that's where the financing plays such a huge part in that, is setting it up for the long term. And, are you trying to make quick money by flipping the property? Are you looking at great cash flow? Are you looking to create equity appreciation over time? I mean, really, what are you trying to do?
Well, and I think even beyond that, it's why you're trying to do it. Mm-hmm. Some people want to use real estate as their retirement vehicle. Mm-hmm. And so they think, well, they've got to have 4 or 5 houses. Yeah. And sometimes it's, putting the biggest down payment on one isn't the way to accomplish that. There's a lot of different strategies you can use to finance multiple properties even.
Absolutely. Yeah, we have clients come in that say they have $300,000 to work with and they want to buy a $500,000 place and put $300,000 down on a 15-year fixed. So if their objective is, like you're saying, is to create wealth over time and create a portfolio, then maybe you put $150,000 down on 2 $500,000 places and you do a 30-year fix on each. Now you've kind of multiplied, your opportunity to grow and create a bigger portfolio over time. As long as you understand the numbers, saying, okay, how much rent am I bringing in, and what's the potential there versus the liabilities going out, and how does that integrate with the rest of your financial position? So it really does come down to creating a plan and having a strategy going into it to maximize what you can get out of it in the long term.
Yeah, you talk about the cash flow opportunity, and that's really what it comes down to. I mean, somebody's short-term or long-term goal might be, well, I just want to generate cash right now. In which case, you need to have a smaller loan amount, and some people may be thinking it's more of a long-term strategy. So it really is not a place where financing is a one-size-fits-all.
It really isn't. And I think there's 2 things to keep in mind about what's unique about the market today. There's been a ton of foreclosures. People have gone through foreclosure. They've gone through short sale. They've gone through a bankruptcy. And these are families with 2 and 3 kids at home who've had tough financial difficulties over the last 2 to 4 years. And these people can't go out and buy again like they have in the past because they have to get through 3 to 5 years of refixing their credit. But these people are used to living in homes. And they're willing to spend extra money each month to get a 2 or 3 year lease. So if you go out and you buy a really great property in a great neighborhood, you're going to have a high demand for renters if you're willing to look past some of their financial difficulties, which a lot of times is isolated. Is you can get great tenants who are going to take care of your house, who are going to pay you above market rents for a longer period of time if you go into it, with the right strategy and buying the right homes in the right neighborhoods.
It seems as if, you're not turning into a rental, you're turning into somebody's home. Mm-hmm. And that seems to be a big difference because, you always hear, oh, it's a rental, just put the mismatched everything in and the appliances and we'll just put laminate all over. But really, if you put in some nicer amenities to it, you may reach that person who is looking for something nicer for their family.
Well, I think one thing that's overlooked a lot of times on the investment side is buying great properties in great locations. You mentioned earlier about the core. You know, when you stay in the core, you tend to get better renters. They're going to take care of your place better, and they're going to pay their rent on time. And you're going to get better appreciation over time because there's always going to be a higher demand for those types of properties. So I think if you go into it with the theory of trying to get the maximize the efficiency out of your portfolio, and you look at those intangibles that sometimes people overlook when it comes to real estate, and especially investing in real estate, that's going to play a big part in the future.
Well, Ryan, when people are out there and they're thinking about their investment goals with real estate, I think understanding that short versus long-term goals, what's important to them from the money side is probably one of the most important things, because that's why you're doing it. You're not buying to live in. You're not buying it for your kids to live in. You're buying it for an investment. And understanding what your investment goals are before you go into something like that has a lot to do with money and the financing.
No doubt about it.
We do have to go to break, Ryan. Thanks for joining us. When we come back, one of the good friends of our show, good friend of mine, Paul Valley, is going to join us. We're going to talk about some smart changes people can make as they get settled into a new one, but not necessarily before they exit on a purchase or sale. We'll be right back after this break.